Good afternoon, everyone, and welcome to Stock Market Today. My name is Ken Shreve, joined today by Justin Nielsen. And on today's show, we'll take a look at another volatile session for the stock market. But I guess 5 words: it could have been worse. We did close. We did close nicely off lows. We'll give you more color on that and what fueled the early sell-off. But before we do that, Justin somehow found 3 stocks to watch for us today.
Yeah, we'll take a look at Neurocrine Biosciences, Ulta Beauty, and also Box. And not everything was hit in the tech area.
Okay, sounds good. Well, let's start by taking a look at the major stock indexes here. I'm actually going to start with the Nasdaq Composite because this index was down almost 4% intraday, and looking at the close, it shaved that loss to about half, 2.2% loss for the Nasdaq. And what is this chart telling us here, Justin? We did get a nice close off low, so some buyers did come in late. That's a good thing.
Yeah, I mean, when you said it could have been worse, it was. It was worse, a lot worse during the day. But when you look at a close that is in the upper part of the range, and we're looking at least in the halfway range, this isn't always updated immediately after the close. The S&P 500 was about in the 67% range of its action today. So that's a lot of ground to make up. So that's a positive. But look, we were undercutting support levels. I mean, if you just look back to recent support at Tuesday, both indexes, all the indexes, really undercut those levels very quickly, and just couldn't seem to get a bid for most of the morning. Just kept on hitting lows, hitting lows, hitting lows, and so that's not exactly what you want to see. And as you mentioned, there were a lot of headlines today that are just continuing to make this a volatile market. If anything on the economic side comes out just a little too good, the market gets hit. If it comes out a little bit too bad, the market gets hit. So there's not much room for error on these economic reports to please investors.
Yeah, and today's weakness came after a pretty solid up session for the market yesterday. I think the S&P 500 actually barely closed above its 50-day moving average. So here's a look at the S&P 500 today, which was also down sharply, but it ended with a loss of about 1.4, 1.5%. Also closed off lows, and looks like we did get higher volume, at least on the Nasdaq. It's kind of a close call on the S&P 500, so we'll most likely add a distribution day to the Nasdaq's count. That's going to be 4 each for the Nasdaq and the S&P 500. The Dow Jones again has proven itself a leading index, and it too closed well off lows, and it's just battling at the 50-day moving average here, Justin.
Yeah, and we can't forget that this whole headline risk is not done yet. We've got a really important few numbers that are coming out tomorrow, and especially that PCE report that the Fed really looks very heavily at. So we do have some inflation numbers that the market will have to digest tomorrow, and it almost was a question of whether or not, given that we've got a holiday coming up where a lot of people saying, gosh, you know what, I might as well just do my selling now before the weekend comes. But yeah, we do have those headlines tomorrow to contend with. The fact that we are getting that support on the Dow Jones Industrial Average at the 50-day moving average line is a positive. But remember, this one is a little bit trickier. It's 30 stocks, it's price weighted, and not always indicative of what's happening in the market in general. So you've got these pockets of individual stocks that are holding up a little bit better, but the majority of stocks are really having tough times. And you can see that one of the ways we look at this is we compare like the RSP ETF, which is an equal weighted S&P 500. Normally the S&P 500 is market weighted, but if you pull up RSP, you can see that there was a lot of damage done in the equal weighted indexes. So it's not just the mega cap techs that are hurting the indexes. It's really kind of the weaknesses everywhere.
Yeah. Well, I was in early this morning writing some headlines for IBD Live, and indexes were down across the board 0.1%. I mean, they were basically flat to mildly lower. And then we got this economic data at 8:30 a.m. Eastern time. Normally, the market does not move very much on these, quarterly gross domestic product revisions, but we got the final read to Q3 GDP. It came in at 3.2%, and that was quite a bit above the consensus estimate of 2.9%. So again, the Fed wants to kind of see bad news about the economy, wants to see these aggressive interest rate hikes starting to spill over and slow the economy down. But that upward revision to third quarter gross domestic product was not what the Fed wanted. And then also jobless claims. The Fed wants to see jobless claims rising, and they did rise, but they didn't rise as much as expected. So that was a bit of a downer as well. But as Justin mentioned, tomorrow some key economic data as well that the market will be watching. All right, and let's just take a look.
And we can't forget about Micron. I mean, so even though, as you mentioned, when you got in this morning, that Micron news had been well digested, but it certainly, you saw that weigh heavily on a lot of the tech and especially the chips. So, I mean, that's one place that we can kind of just take a look, too, is eventually at the SMH, because the chips were really hit hard, a lot of those.
Well, you can see the IWM, the Russell 2000 ETF, closed nicely off lows, only down 1.3. Let's take a look at a couple of ETFs that are fighting a good fight here. We'll get to SMH next, but let's start with XLV. This is the Spider Healthcare ETF, and Justin, this one looks like it just came down close to the 50-day moving average and retesting kind of a prior buy area here.
Yeah, and most importantly, it was really just not giving up that much ground versus the market. So you look at where it closed in its range, at the upper part of its range, down very, very slightly. So it made up a lot of ground, but it never really gave up as much ground to start with. So we were seeing that strength in a lot of the medical areas, as we were talking on IBD Live this morning. Sometimes that healthcare ETF, the sector, can be a little bit more defensive in nature.
Absolutely.
And that certainly, is potentially the case right now. It's certainly holding up a lot better than a lot of things. And you can really see that with that relative strength line, that blue squiggly line that is getting into new high ground.
Yeah, absolutely. Here's the RS line right here, shooting into new high ground. And let's go to an ETF now that, let's just say it's not defensive. And this is the SMH. This is the VanEck Semiconductor ETF. And again, kind of a dire results from Micron fueled a lot of selling in the semiconductor sector today. But this one, came down to the 200 level and also closed off low. So could have been worse.
Yeah, absolutely could have been worse. And remember that, not all stocks are created equal in this group. There's definitely some that were really hard hit and others that held up well. So when you're looking and doing your own research, it's really important to be looking at those relative strength lines on days like today when the market gets hit. It's really important to look at the ones that are resisting the downtrend and maybe showing a little bit more strength. That's investors showing their hand. They're tipping their hand on what stocks they're still willing to buy on these pullbacks and what stocks they're a little bit more nervous about.
Okay, well, that's a good segue to biotech stock here that we've been following, and still seeing a lot of strength in the biotech sector. It's a very, very big group in our database, hundreds of stocks in there, but a lot of strong price performers, including Neurocrine Biosciences NBIX.
Yeah, so this is one that we've had on leaderboard for a while, and we've traded around the position. We took some gains on a partial position of it earlier in the year, a month or two ago. But now what happened here is it came down to the 50-day moving average line, and we had an opportunity to add back some of those shares that we sold earlier on. So the fact that this is one that not only was it up, but it was up a decent chunk. I mean, 1.7% is not chump change. That's pretty impressive following up on yesterday's move. And so when you see stocks that are, again, able to kind of shake off the news of the index, shake off the pressure of the downtrend, those are stocks that you really want to keep an eye on. And so I think Neurocrine definitely deserves a spot on a watch list if it's not already owned. It's got a lot of things that are exciting about what it's doing in the biotech area, how they're developing different drugs and treatments and things like that. So and this isn't as speculative, like, all biotechs are speculative, sure, but this at least has earnings. It has a steady stream of revenue. So you've got something to hang your hat on already, as opposed to just waiting with pins and needles for the next clinical trial to come out.
Yeah, this was a good entry for leaderboard. We entered it, give or take, right in this area here as it was coming out of this little shallow consolidation. So we've had that on leaderboard since early September, I think. So, and we were talking before the show. Amazingly, leaderboard held tight with the 9 stocks or so that we
Yeah,
have in the model portfolio, and didn't have to unload anything because we got some rallies late. So that's a good thing. All right,
yeah.
let's go to the retail sector and take a look at Ulta Beauty, a stock that I was watching today, thinking, boy, this one is still acting pretty well here. And what do you see here, Justin?
Yeah, I was really impressed with a lot of a number of retail stocks that acted very well yesterday, and Ulta just wasn't giving up ground today either. It built on its gains from yesterday, another 1%. And this is one of the few cases where you saw some volume coming in. Volume was light in a lot of individual stocks as I was looking through my watch list, but Ulta really stuck out in that it had some very heavy volume as it was doing this bounce. From the 50-day moving average line, if you take that step back, you can also see a nice bounce off the 10-week line. And it really kind of came down to uh, a level of the top of its base. So that's kind of nice too. So it's getting support in all the places you'd like to see it. And again, this is a stock that does have earnings. It does have revenue, and it's not alone. You're seeing a number of retail stocks, not all of them, but a number of retail stocks that are doing fairly well, whether it's in the apparel area or in the restaurant area, that are holding up pretty nicely.
Yeah, which is a bit counterintuitive. If the
Yeah,
economy is supposed to be so bad next year, why would retailers be doing well? But who knows? Maybe Ulta's going to have a big holiday shopping season to boast about in a little while. So we'll see. And then finally, let's take a look at a technology stock. Not too many technology stocks acting well in this market, but here's a ticker symbol BOX, database software firm. This is a pretty intriguing chart as well.
and what really is interesting about this one is, remember, it's not just about today, but there was this really big pullback in the indexes. I mean, the Nasdaq pulled back almost 10% from its December 13th high, and the S&P 500 was about 7.5%. And this just didn't give up any ground whatsoever. I mean, this is still coming into its 10-day moving average line and hasn't
Mhm.
broken that. Very impressive in this market that's been kind of pulling back and showing weakness. Box just refuses to give up ground, and you see that again with that strong relative strength line just shooting up into new high ground. And it just goes to show you that you just can't always say, okay, all tech is bad. The price is showing you that, hey, there are some spots out there that are showing some strength or at least resilience. And that resilience is what can become in the future your next big winners.
Some people might call Box, a pricey stock. It's selling at 30 times trailing earnings here, but you do have these nice estimates here for fiscal 23 and then 24. So it does have a growth story to support this 30 PE ratio. So yeah, a lot to like about Box, and this thing really started moving after it reported earnings a few weeks ago. So. Kind of an anomaly in the tech sector, but another one
Yeah.
for the watch list. All right, well, we'll keep our fingers crossed for a positive response to a lot of economic data tomorrow, and so we'll be discussing that on IBD Live. So be sure to join us. We have a great guest tomorrow, Matt
Oh,
Caruso,
yeah.
I believe. Yeah, Matt
Yeah.
Caruso finished fourth in the 2020 U.S. Investing Championships with a real money return of 346% in 2020. He's a chartered market technician, a very popular guest on IBD Live. So if you haven't had a chance to check out IBD Live, just go to investors.com/IBD Live and you can take a 2-week trial. We'll look forward to hear what Matt Caruso has to say tomorrow. Justin, thanks very much for your insight as usual. That'll do it for today. It'll be Justin and Ed tomorrow to wrap up the week. Until then, have a great afternoon, and we'll see you back here tomorrow.